Hello everyone, welcome to EduTap and welcome to Finance 360-degree session. I hope I'm clearly audible and visible, so give me a thumbs up if everything is fine. And today we are going to discuss the three important news articles. We are going to discuss the important RBI notification and two important RBI press releases. Okay, so first of all, the Reserve Bank of India has released BSR 1 and BSR 2. BSR 1 is for the credit data and the BSR 2 is for the deposit data of the scheduled commercial banks, excluding the RRBs, excluding the regional rural banks. Okay, now the BSR 1 and the BSR 2, these are released for the quarterly, okay, for April to June 2025 quarter. And as you know that the examination, the phase 1 is on 18th October 2025. So before that, the quarterly data has been released, so this data becomes important. Okay, and I will tell you that which data points you have to keep in mind, because this was quite in news also. The data was quite in news, as well as the data is also important. And you have seen that in the 2024 RBI Grade B examination, in the phase 1, the questions came from the surveys that are released once every 2 months. Okay, so if the data came from that, so that means the data can also come from the quarterly data of the credit and the deposit. So we are going to discuss the important data that you need to keep in mind from the BSR 1 and BSR 2. You do not have to remember all the data. I will provide you the important key points that you have to keep in mind from these articles. Okay, the next one is that there is the amendment that has happened in the KYC, and there are new things that have been brought. So we will discuss that what are these new things, how they are going to help the different segments of the society and such. So let's discuss that. Okay, so these are the three news articles. Yes, correct, Guru Raja. We have already covered this in our, so in the course, in the RBI NewsTap session yesterday, we have covered this. Okay. Yes, you can leave. Okay, and I hope you have already given the feedback there. Okay, so now let's start with the session, and we have already covered these news articles in the course itself. Now we are going to cover it in the YouTube for the YouTube students. So let's get started without any delay, and I hope I'm clearly audible and visible. So now let's get started, but before that, do subscribe to the YouTube channel of EduTap and do join our Telegram channel, where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So now coming to the data, first of all, quarterly basic statistical return 1, that is BSR 1 data is released. This is the quarterly basic statistical return 1. This consists of the credit data for the scheduled commercial banks, excluding the regional rural banks. So the data is excluding the regional rural banks, and this data is released for the first quarter, that is from April 2025 to June 2025. Okay, now the Reserve Bank of India has released its web publication entitled Quarterly Basic Statistical Return 1 on Credit by Scheduled Commercial Bank June 2025 on its database on Indian Economy portal. Now it captures, so basically this basic statistical return 1, it provides the credit data for the scheduled commercial bank. So it captures the credit data for the occupation or activity of the borrowers, that for the agriculture sector, for the construction, for the manufacturing, for the retail trade, how much of the loan is going to the different occupations or the different activities, as well as how much loan is going for the different organizational sectors, how much loan is going for the household, how much loan is going for the private sector, how much loan is going for the government sector, for the not-for-profit organizations. So the credit data is seen from the occupational level, from the organizational sector level, type of account, as well as interest rates based on account level reporting. So all this data is undertaken, or all this data is shown in the BSR 1. The data reported by schedule. Now this data is reported by the scheduled commercial banks, excluding RRBs. These are presented for bank groups, population groups and states. So basically the scheduled commercial banks report this data to the Reserve Bank of India, and RBI provides this quarterly basic statistical return on credit. Okay, so this is the credit data. Now let's come to the details. So bank credit growth, the growth that has happened in the bank credit, that has been 9.9%. So that means the bank credit has grown by 9.9%, which is lesser than the growth in the bank credit as compared to last year. Okay, so basically the bank credit has grown, but by a lesser percentage as compared to the growth in the bank credit in the last year June 2024. So year on year means that we are comparing June 2025 with June 2024. Okay, so for all the data that we will be discussing in BSR 1 and BSR 2, the year on year data is taken. That means we are comparing June 2024 with June 2025, or we are comparing June 2025 with June 2024. Okay. So bank credit growth has decelerated. So the growth has happened in the bank credit, but that is by a lesser percentage as compared to the last year. Now net of merger means that, let's say, SDFC Bank has merged with the SDFC. So SDFC Bank has merged with the FDIC Financial Limited. So that means the liabilities, the loans that were provided by the SDFC Finance Limited, as well as if any deposits were taken by the SDFC Finance Limited, that is merged with the SDFC Bank. Okay, so net of merger means that we do not want to see the data for the non-banking financial company. We do not want to see the data for the non-banks. We only want to see the banking data. We only want to see the credit given by the banks. That's why net of merger, we are deducting the merged liabilities or assets, okay, of the merged entity. We are only taking the banking data. We are not taking the data of the merged entities. That is the idea. So basically bank credit growth has happened, but that is by a lesser percentage of 9.9% as compared to 15% in June 2024. Next is the share of loans bearing interest rates below 9% increased. So basically you can understand that the repo rate has been decreased. In February 2025, the repo rate was decreased. Then again in April 2025, the repo rate was decreased. Then again in June 2025, the repo rate was decreased. So repo rate has been continuously decreased. So if repo rate is decreasing, that means the interest rate will decrease in the economy. So here you can see that the share of loans that is having interest rate below 9%, that has increased. So the share of loans bearing interest rate below 9%, that has increased to 54.1%. So that means the lesser interest rate. Now there is lesser interest rate that is happening in the economy, and the share of loans that is having less interest rate, that is the interest rate of less than 9% or below 9%. Those loans are increasing that have the interest rate of below 9%, that has increased to 54.1% as compared to 43.2% in the previous year. Because of the easing of the repo rate, because the repo rate has decreased, so the interest rate is also decreasing in the economy, and the share of loans that is having lesser interest rate, that is the interest rate below 9%, the share of loans is increasing with the lesser interest rate, with the lower interest rate. This is the idea. Now here you do not have to remember these percentages, but remember that the interest rate is decreasing in the economy, and the interest rate below 9%, those share of loans are increasing. Now coming to the next point, that is in line with monetary policy actions, as the repo rate is decreased, so the interest rate is decreasing in the economy. That means lending rate is decreasing in the economy. So weighted average lending rate, that is the average lending rate that is weighted for the different sectors. So different sectors are getting the loans. So let's say agriculture sector is getting 10% of the loans, the manufacturing sector is getting 20% of the loan. So as per the weight that is taken for different sectors and the interest rate. Now they have different interest rate. Let's say agriculture is getting 6% of interest rate, while the manufacturing is getting 12% of the interest rate. So basically average lending rate is taken, average interest rate is taken, the interest rate, average interest rate is taken. The average is done of the interest rate in the different sectors, and different weights are provided to the different sectors as per the lending that is happening in those sectors. Okay, so weighted average lending rate. So this is the average lending rate. This is the average interest rate. Now basically repo rate is decreasing, so this lending rate or this interest rate is also decreasing. So weighted average interest rate or weighted average lending rate on the outstanding credit has declined by 39 basis point, that is by 0.39% during April-June 2025, because of the reduction, and there is a reduction that has been observed in all the major sectors. So basically the repo rate is decreasing, so the weighted average lending rate has also decreased. This is the idea. Any confusion here, anyone? And the decrease in the weighted average lending rate is by 0.39%, that is by 39 basis points. Next is public sector banks recorded higher credit growth as compared to the private sector banks. So here remember that which segment of the banks have recorded higher credit growth. So that is public sector banks have recorded higher credit growth as compared to private sector banks or the foreign banks. Okay, and the public sector banks have largest share in the total loans. So in the total loans, the largest share is with the public sector banks, as well as their loan growth is also higher, or credit growth is also higher. So public sector banks have the largest share, that is 53.7% of the share in the loans is of public sector banks, and their credit growth is also higher as compared to private sector banks and the foreign banks. Next is personal loans continue to grow faster than overall credit. If the overall credit is growing by 9.9%, so personal loans are growing faster than that, okay, gradually increasing their share to 32% in the total loans that were given by June 2025. So this is somewhat problematic also, because you can understand that the personal loans that are usually the consumption loans also, that consist of the housing loans also, they are increasing faster, while the industrial loans are decreasing, or they are also growing, but their growth rate is decreasing, okay. So the personal loans, they continue to grow faster than overall credit, and they are gradually increasing their share in the total credit. Now will become a problem when the industrial loans keep on growing by a lesser percentage, and industrial loans, if they start declining, then the problem will come, okay. So personal loans are continuing to grow faster than the overall credit. It is fine for now, because the housing loans accounted for more than half. So if the personal loans are taken, that is more than 50% is for the housing loans, okay. So out of the total loan, 32% of the share goes to the personal loans, and in the personal loan category, 50%, more than 50% is going for the housing loans. So for now, personal loans are fine. It is continue to grow faster than the overall credit. That is fine, but we have to focus on the industrial loans also. We have to help industrial loans grow by a faster percentage, because the industries have to expand in the country, okay. That is the idea. Next is industrial credit growth has declined to 7.6% from 11.3% a year ago. That means industrial credit growth has happened, but by a lesser percentage. So credit growth is happening in the industrial areas, but by a lesser percentage as compared to a year ago. Next is the share of individuals in total credit has rose, as well as growth in credit to female borrowers continue to outpace. So the growth in the credit to the female borrowers is higher than the growth of the credit to the male members, okay. So lifting women's share. So out of the total loans that is going to the male and female, that is the total loans that is going to the individuals, only 23.7% is going for the females. So even though the growth is higher, the growth of credit to the females is higher, but still there is a small chunk of the loans that are going to the females, that is 23.7%. So basically growth of credit to the females is higher than the growth of credit to the males, but still only 23.7% of the chunk of the total credit to the individuals, it is going to the females. Next is metropolitan branches, because they are available or they are present in the metropolitan areas, and a lot of loans are taken there. So metropolitan branches accounted for the majority of the bank loans, but still the proportion of the loans provided by rural areas, rural branches, semi-urban branches, urban branches, they recorded higher growth in bank lending. So even though metropolitan branches, they accounted for the majority of bank loans, 59.7%, nearly 60% of the loans of the total credit were given by the metropolitan branches, but still in the rural branches, semi-urban branches, urban branches, they are recording higher growth in the bank lending. So their share is also increasing slowly and slowly. That is the idea. So this is BSR 1. This is BSR 1. Okay. Coming to the BSR 2. Any confusion in the BSR 1? Any confusion in BSR 1? So now coming to the BSR 2, that is the basic statistical return that provides the data for the deposits with the scheduled commercial banks. Okay. So Reserve Bank has released the web publication Quarterly Basic Statistical Return on Deposits with Scheduled Commercial Bank. So Quarterly Basic Statistical Return 2 has been released that provides the data for the deposits with the Scheduled Commercial Bank. Okay. And the deposits the deposit data is provided for the scheduled commercial banks excluding the RRBs, and they report the quarterly branch-wise data on type of deposits, that the current account, savings account, term deposits, how much of the term deposits have come, how much of the savings deposit has come, and such. So now let's see the data one by one so that you have a better understanding. Metropolitan areas like Bangalore and such, that have like Delhi. Okay. Now, bank deposits with scheduled commercial banks, the bank deposits with scheduled commercial banks registered a growth of 11.3% as at the end of June 2025 as compared to the 11.7% of the bank deposit growth that happened a year ago. So bank deposit growth has happened by 11.3%. That is nearly around the growth that we saw last year also. Next is term deposits recorded a growth of 13.5% as compared to the saving deposit growth of 5.4%. So term deposit growth is higher and the term deposits are growing by a faster rate, as well as the share of term deposits in the total deposits, the share of term deposit was up to 62.2%. So that means majority of the deposits are going under the term deposits. Now term deposits, they are the time deposits, that are the deposits that is happening with the bank for a time period. Okay, so fixed deposit, recurring deposit, they come under the term deposit because they are deposited with the banks for a maturity period, for a time period. So term deposits, they recorded a growth of 13.5%, and their share of term deposits in the total deposit has increased to 62.2%. Now nearly 70% of the term deposit accounted for original maturity bucket of 1 to 3 years. So basically nearly 70% of the term deposits, they have the maturity of 1 to 3 years, as well as nearly 20% of the term deposits, they have the maturity of more than 3 years, sorry, less than 1 year. So 20% of the term deposits, they have the maturity of less than 1 year, and the rest, that is around 10% of the term deposits, they have the maturity of more than 1 year. So 70% of the term deposits, nearly 70% of the term deposits, they have the original maturity of 1 to 3 years, whereas around 20% of the term deposits, they are the short term deposits that have the maturity of less than 1 year, and around 10% of the term deposits, they have the maturity of more than 3 years. Okay, so that is the idea. Term deposits, they are the time deposits that are deposited with the bank for a time period, like your fixed deposit that you are depositing with the bank for 6 months, 1 year, 5 years and such. Okay, so recurring deposits, fixed deposits, they come under the term deposits. I hope it is clear now. So reflection of recent monetary easing. So what has happened? Repo rate has decreased. So the interest rate is decreasing in the economy, and that's why the deposits bearing higher interest rate of 7% and above have declined. Because the interest rate is declining in the economy, so the deposits that have the higher interest rate, they are also declining in the economy. Okay, the share of term deposits of size rupees 1 crore and above has increased to 45.7% in June 2025 as compared to 44.8%. So basically the share of term deposits of size 1 crore and above, that has increased. Now share of household deposits witnessed modest decline in recent periods. So there is a slight decline that has happened in the share of household deposits, while the share of deposits done by the financial corporations have increased. Okay. Next is deposits growth of public sector banks. So basically the deposit growth of public sector bank is 10.2%, while the deposit growth of private sector bank is 12.4%. So deposit growth is higher in the private sector banks, but still the share of deposits is maximum going to public sector banks. Okay, so basically the public sector banks have the deposit growth of 10.2%, while the private sector banks have the deposit growth of 12.4%. So private sector banks have higher deposit growth, but still the share in deposit is higher for the public sector bank. So that is the idea. Next is top 5 states, that is, or union territories, that is Maharashtra, Delhi, Karnataka, Uttar Pradesh and Tamil Nadu. So these are the top 5 states or union territories that collectively accounted for 54.3% of the total deposits. So out of the total deposits, 54.3%, that is the majority of the deposits, are coming from these 5 states or union territories, and 47.8% of the household deposits are coming from these areas. Now this is the idea. So BSR 2 is also done. We will move forward with the KYC, but let me tell you the important data that you have to keep in mind. So first of all, from the BSR 1, the bank credit growth as well as interest rates below 9%. So this is important. 39 basis point, this is important. Just remember that public sector bank recorded higher credit growth and they have a higher share in the total deposits. Personal loans continue to grow faster than the overall credit and their share, you can remember. Next is industrial credit growth as it was directly in the headlines of the newspaper, so it is important, but remember the current data only, previous data is not important. Okay, growth in credit to female borrowers. Here you can see, just remember that the growth of credit to female borrowers was higher than the growth of credit to the male borrowers, but the chunk of the total deposits is lower for the females, that is 23.7% only. Here metropolitan, the data is not important, just that the rural, semi-urban and urban branches, they are recording higher growth in bank lending. Next, coming to the BSR2. So here remember the total bank deposits growth data, as well as just remember that the term deposits, they are recording higher share in the total deposits, as well as 70% of this for this maturity and 20% for maturity of less than 1 year. Okay, next is 7% and above interest rates, deposits bearing 7% and above of the interest rate, they are declining. Next is that, yes, this is important. So these are the important areas. In this, you just have to remember the basic idea that public sector banks growth is lower than the deposit growth in the private sector banks, but still the public sector banks have the majority of the chunk in the deposits. That is the idea. No, Saf, if you have already done the class in the course, then these YouTube classes, if they have the same topic, then you do not need to cover it. Okay, because you have already covered it in the course now. Got it? Now, coming to the last news article for today. So Reserve Bank of India Know Your Customer Second Amendment Directions 2025. So the RBI has amended the Know Your Customer regulations. So basically, why the Know Your Customer was done, or why it was initiated in 2016. So it was initiated so that the verification can happen that actually the person whose IDs are being submitted, the person is the one that is opening the bank account or not. Let's say I take the ID of 5 individuals and I open the bank account in their name, and there is no verification process. So I open the bank accounts in the name of these 5 individuals. I have just stolen their IDs, okay, and I have opened the bank account in the name of these 5 individuals. Now I am doing money laundering through these 5 bank accounts. I am doing the money laundering, I am sending the money, I am sending the black money out and such. So you can understand that that's why the Know Your Customer was initiated, or KYC was initiated, so that the verification process can happen that actually the individual who want to open the bank account is the one whose IDs are being submitted, or the IDs are being submitted of a person who actually wants to open the bank account, okay, and the individual is directly involved in the bank account, and the ID is not stolen, or there is no third party that is opening the bank account in the name of certain person, okay. So Reserve Bank had issued the Reserve Bank of India Know Your Customer Directions 2016 in compliance of the provisions of the Prevention of Money Laundering Act of 2002 and the rules made thereunder. So this is the basic idea that Know Your Customer is required for verifying the ID and the details of the person, and for the verification, so that if the accounts are being opened, they are being opened by the person whose ID is there. No third party is opening the account in the name of some other party, okay. Now, so there are different, so RBI has got the power to amend the KYC directions through the Banking Regulation Act, RBI Act, as well as the Payment and Settlement System Act and the Foreign Exchange Management Act, Prevention of Money Laundering, Maintenance of Records rules. So all these rules and the acts, they are providing the power to the Reserve Bank of India to amend the KYC norms if required in the interest of the public. That is the idea, and now the RBI has amended the KYC norms. Coming to the amendments, so there are 4 major amendments that has happened. Let's start with the first one. So first one is customer acceptance policy. See, the banks do not accept all the customers. They have a verification process. They have the verification and the customer acceptance policy. So the customer acceptance policy should not be so stringent, should not be so strict that it leads to the denial of banking or financial facility. So customer acceptance policy shall not result in denial of banking or financial facility to the members of general public. The general public should be able to access the banking facilities, and the customer acceptance policy of the banks should not be such stringent or hard that it is denying the banking or financial facilities to the members of general public. Okay. So customer acceptance policy shall not result in denial of banking or financial facility to members of the general public, especially those who are financially or socially disadvantaged. Now this highlighted part has been added recently under the amendment. So in the disadvantaged category, it is written that including the persons with disabilities. Okay. Now, no application for onboarding or periodic updation of KYC shall be rejected without application of mind. So that means that no application for onboarding. Let's say I want to open a new account in a bank. So no application for onboarding or periodic updation of KYC, this shall be rejected without application of mind. Application of mind means that a competent authority or the officer must thoughtfully review the individual case, considering all the relevant facts, especially the disadvantaged status of the applicant. So no application for onboarding or updation should be rejected without review of the individual case, that why is it being rejected, what is the reason for rejection. So individual cases have to be reviewed, that if the rejection of KYC is happening or if the rejection of updation is happening, so why it is happening. So competent authority has to give the individual review or the review to the individual cases. Now reasons of rejection has to be duly noted by the officer concerned, so that there is transparency and there is fairness that is maintained and there is accountability that is maintained, that later on it is found that the reason was wrong or the reason was not fair, so at least we have a person to make him or her answerable, that why did you give this reason when it was an unfair reason and such. Okay, so basically customer acceptance policy should not result in denial to the banking facilities or the financial facilities, especially to those who are financially or socially disadvantaged, including the persons with disabilities. No application for onboarding or periodic updation shall be rejected without the review of the individual case, as well as reason of rejection has to be duly noted by the competent authority. Next is for the purpose of verifying the identity of the customers. So let's say I want to open a fixed deposit account with State Bank of India, or I want to take the loan from Punjab National Bank, or I want to open a recurring deposit account with the ICICI Bank, or I want to open a savings account with SDFC Bank. So there is KYC that is required. Now the banks can do the KYC themselves, or they can take the KYC, know your customer details, from the third party. That is, let's say, Central KYC Records Registry that maintains the record, or any other third party. Okay, any other party. So this is the idea, that for the purpose of verifying the identity of the customers at the time of the commencement of an account based relationship. Account based relationship means I am opening the account in a bank, or while carrying out occasional, let's say I am a walk-in customer, I'm saying that I do not have a bank account in this area. Okay, I do not have a bank account. I am a walk-in customer in State Bank of India. I do not have a bank account in State Bank of India, but through the State Bank of India, I want to transfer the money to the bank account of my mother. Let's say she is living in Uttarakhand or Uttar Pradesh, she is living in some state. Okay, so walk-in customer, I am a walk-in customer in the State Bank of India. Now the State Bank of India can take the KYC details from any third party. Let's say I have a bank account in PNB, so, or let's say from the Central KYC Registry Records, the KYC details will be asked from. Okay, so while carrying out occasional transaction of an amount equal to or exceeding rupees 50,000, whether this transaction is happening in a single basis or through several transactions that appear to be connected, or for any international money transfer operations, the regulated entities, they have to do the due diligence done by, they have to take the due diligence done by a third party. Okay, so they have their option that either do the KYC yourself and take the documents yourself, or you can take the KYC details from the third party. This is the idea. So if you want to open any account, or if the bank, if you are going to the bank to open your account, either the bank will do the KYC, or the bank will take the KYC details from third party or from Central KYC Records Registry. Similarly, if there is a walk-in customer who is doing the transaction equal to or exceeding rupees 50,000, so if there is an occasional transaction that is happening of amount equal to or exceeding 50,000, whether it is happening in a single transaction or related transactions, or if there is any international money transfer operation that is happening, so regulated entities, either they have to do the KYC themselves, or they have to take the documents, important documents themselves, or they have the option to take the KYC details or due diligence details from the third party. Example I have given you. Any confusion here? Anyone? So this clause has been added. This was not before. So it has been added that while the occasional transaction is happening, it has to be seen that if the transaction is equal to or exceeding 50,000 in a single transaction, 50,000, I want to send 50,000 to my mother. I'm a walk-in customer in State Bank of India. I want to transfer 50,000 to my mother. Or today I'm sending 10,000, tomorrow I'm sending 30,000, and after that I'm sending 20,000. So once the amount becomes equal to 50,000 cumulatively, or it becomes exceeding 50,000, then the bank has to take the steps to do the KYC themselves, or they can take the KYC details from a third party, from the registry and such. Okay. Next is biometric based eKYC authentication. So till now biometric happened through the iris scan or through the fingerprint scan, right? So biometric based eKYC authentication has included this new clause in the amendment. Under the KYC norms in the amendment, this new clause, so highlighted part are the new clauses. Okay, so this has been included, and recently it was said that the face authentication will be allowed because there are many of the disabled people, or there are many of the people that are not able to do the iris scan, or they are not able to have the fingerprint authentication. So for them the face authentication will be allowed, or for the people the face authentication will be allowed now. So biometric based eKYC authentication will include the Aadhaar face authentication. So till now only the fingerprint and the iris scan was allowed. Now it is included that Aadhaar face authentication can also happen, can be done by bank official or business correspondents or business facilitators. Okay. Next is video based customer identification process. So video based customer identification process, this happens for your KYC and such. Now here what happens that you have to be present live and you have to answer the questions of the agent of the bank. Okay, so let's say you are live and the agent is asking you your name, your state in which you are living currently, and such and such. So you have to be live. Now the agent has to keep in mind that the liveness of the person is being checked, that it is not a recorded video. It is not a recorded video. Let's say I have recorded or some third party has recorded my video, that say your name or the Aadhaar number and such. So that recorded video should not be there. Or deep fake, like deep fake also happens now, that my someone else is using my facial features. So the agent has to keep in mind that the liveness is being checked and the authentication is being checked. Like there is no suspicious activity that is happening. So that is a liveness check that is done by the agent. When you are live, there is a liveness check that happens. Okay, so the video based customer identification process shall be operated only by officials of the regulated entity that are specifically trained for this purpose, as well as liveness check has to be carried out, so that the person whose KYC is being done through video is actually available there, is actually answering the questions there, is actually the one who wants to open the account or who wants to do this transaction. Okay, now this clause has been added that the liveness check shall not result in exclusion of person with special needs. So sometimes there are people who have the cognitive disability or who have some mental illness and such, as well as they have some other illness, or they are physically disabled. So the liveness check should not result in the exclusion of such person with the special needs. It has to be taken into account that the people do have special needs. Sometimes let's say I'm not able to answer immediately, or let's say I have a problem and I'm not able to answer immediately for the questions, or I'm stuttering. So it's not like that is a suspicious activity. Maybe there is some cognitive disability, or maybe there is some problem that is there, right? So it has to be taken into account. The special needs have to be taken into account in the liveness check when the video based customer identification process happens. This is the idea. Customer identification process. Customer identification process. Now this is the first question. I hope you will be easily able to answer this question. Here you have to tell that which of the following statements is or are correct. Okay. Read the statements carefully and then try to answer. Coming to the second question, here you have to tell that which of the following statement is or are incorrect in regards to the BSR 2. So this is the second question. Now before going to the third question, let me show you that if you go to edutap.in, you can go to courses section, and if you want to see the RBI Grade B courses, because the notification has been out, and if you want to see the RBI Grade B courses, there are multiple courses that we are providing you. So here you can see that the live crash course has started and we have started the classes. yesterday there was the second class of RBI NewsTap that happened, where we discussed the RBI notification press releases of August month in the live classes. So you can join the live crash course for phase 1 and phase 2, where the QRE, GA classes will be provided live, as well as there will be solved previous year questions that will be given to you. Chapter wise tests are there, chapter wise documents are there, full length test is there. Okay, as well as if you want, you do not only want the live classes, but you want more comprehensive material and the recorded material and such also. So you can take the silver course. If you want only the phase 2 material and for the interview preparation you want the material, you can take the silver course, or you can take the gold course, where you will be getting the phase 1, phase 2 and interview more comprehensive material. But if you want to prepare in the limited time frame, then I think live crash course is the best right now, because phase 1 is on October 18th. So right now there are live classes that are going on, and they started from 9th September only. So you like only 2-3 classes have happened till now, or 4 classes have happened, because in morning and evening batch the classes are going on. Okay, so you can join the live crash course, and you can see that there is flat 71% off that is going on, as well as you can also call the team and you can connect with the team through this hello@edutap.co.in, so that you can know about the courses, or if there is any understanding that you want. Okay, so now this is the third question, so do try to answer this question. No, Aniket, we don't. Okay, so this is the first question. I hope you will be easily able to answer this question. This is the second question. Now coming to the third question. So this is your third question, where you have to tell the amount for the transaction for which the KYC has to be done for walk-in customers or for the occasional transaction. So this is the idea. Thank you everyone. Thank you for joining. I hope you enjoyed today's session. Let's meet in the next session now. So thank you everyone. And the PDF you will get in the Telegram channel of EduTap. The link for the Telegram channel is provided in the description box below. Thank you everyone.